Hello everyone, Piotr speaking. This is a short video regarding money management and profit taking. I thought there is a need for some of you to talk a little bit about risk-reward ratio. We use this indicator just in order to show us where we should realize our take profits, where we should take our profits while investing on the Forex market. In the Forex world, if you take a position in the Forex world, you usually risk your money. Let's say you take 10 euros risk. So you would like to expect that you will make at least 10 euros as a profit. So this is 1-to-1, risk-reward ratio 1-to-1. And in the Forex world, we say it's better, so you should try to get at least 1-to-3. Okay, so your profits are 3 times as big as the risks you've taken. So if you take 10 euros risk, you would like to make at least 30 euros as a profit. Okay, and this can go much higher, and I wish you will go up much higher. And now I'd like to show you a few examples how it works in my trading, and I'll try to explain a few issues regarding this topic, because there are a few there might be different point of view regarding this topic. Of course, there's a point of individual preferences as well. This tables all the position, all the signals I've sent to my subscribers. Okay, so there were 23, today is the 23rd position sent for the Euro Japanese yen, but there were more than 20 positions, and 4 of them there were lost positions. Okay, and as you can see, I've got usually a few levels of profit taking. Usually I set up a TP1, TP2, TP3. Sometimes I make a comment and say, okay, you can keep your position a bit longer. Sometimes I use a TP0, which is a very close position to the entry level. It's usually around 20 pips, and I say I've got it in my rules regarding my signals that it's worth to move your stop loss to the entry, to the break-even point a bit earlier, or just after your position has reached TP0. Okay, but let me explain it a little bit more on a few examples. Let's take the last position on Euro USD. I located a very nice trade setup at this level. Okay, so that was in this area. We are on the daily chart. I've shown it on my Google Plus account when I write to my subscribers, and I show and I prepare them for a coming trade setup and for the coming reversals areas. And this trade setup was located in this area, and I said, okay, this Euro USD currency pair may reverse and go to the downside. Let's look a bit closer, and I've sent a few signals regarding that. Okay, and this one signal, I usually send updates to the signal, and my initial signal was 31. Then I move it a little bit lower to 26, and then it was 14 because the market started going down. So I thought I was afraid, because let's see what happened when I sent the signal with 26. You can see on that Friday, on the 24th, the market reached only 138.24. Okay, so it was very close to the 26, but the 26 wasn't triggered. Okay, so I usually sometimes, quite often, let's put it that way, quite often send an update short after that, just in order to enter into that position, and that was 14. Okay, so you had the entry level at 138.14. Let's go to this risk-reward topic. You've got your position with 138.14. Okay, the stop loss, we had the initial stop loss at 38.39. Okay, we've got our 14 level, and we've got this 30.39 as a stop loss. So this is roughly 25 pips. So this is, let's say, roughly 25 euros. Okay, and people sometimes say, oh, I wasn't able to make, or I closed all my position at TP0, so I wasn't able to make more money. Okay, and please send signals only with TP2 or TP3, so I can make more money. Yeah, you can put it that way, but let's have a look on this trade setup and how it was developing, and why I'm sending sometimes a few levels for profit taking. Just after that, the position was started, you were able to make at least 1-to-1 or 1 to 1.5. So you were risking 25 euros and you were able to make 30 euros or 25 euros, even maybe even 40 euros. Okay, so this is 1-to-1. But you say, okay, I'm waiting for 1-to-2. Okay, so you wait, and the markets go to the upside. And you are now at that level, you are again with zero profits. Okay, and there is a risk that the market will go to the upside and trigger your stop loss in this area, because you don't know what the market will do. Nobody knows. Okay, so we can only take a position and set up our stop loss, but we don't know whether the market will go to the downside or not, or the market will trigger this stop loss and then go to the downside. Okay, so we don't know that. This is a perfect position, of course. I locate perfect trade setups, and majority of my trade setups develop in that way. But in order to explain it, and we don't know what the market will do, of course. Okay, so you had your 25 pips, and it goes back, and you've got 0 pips profits. Okay, and you start thinking, okay, what can I do now? What shall I? What's wrong now? Shall I keep it or not? Okay, you say, yeah, I'll keep it. I keep it until 1-to-2. So risk reward 1-to-2. You've got your 1-to-2. It's 50 pips. Then it goes suddenly very strongly to the upside, and you've lost your profits, and you've got only 5 pips profit. And most probably, you are nervous in this situation, and you close your position. Probably because you say, oh my god, I had 50 pips and I've lost all these 50 pips, and these 50 pips, that could be 50 euros, and it can be even 500 euros. Okay, so you've lost everything. You've lost your 50 euros as a profit. And tell me whether you are able to keep your position in when you are here in this area. Maybe when the market started going to the upside, you said, oh my god, I've got my 50 pips, I'm losing my 50 pips, so I'm closing this position. Okay, and you've closed it with 30 pips, or with this 1-to-1 25 of 30 pips, and then the market finally goes to the downside. Okay, and you make your 1-to-3. Okay, and this is 75 pips. Okay, but we know it afterwards. We don't know it how the market will react during this whole time. Okay, so you have to ask yourself and answer yourself, okay, what is better for you? What's your own personal preferences? Okay, are you making 1-to-1, or are you willing to make 1-to-1? And maybe if you made your first 25 pips, you say, oh, okay, good, the market is again at this level where I started, and it's not willing to trigger the stop loss. It's not willing. There's no force to go to the upside. There are no forces to go to the upside. I may enter once again with the same position, because I've made my profits. I've got 25 pips in my pocket, so I can risk those 25 pips again. This 25 pips or this 25 euros again. Okay, so you are risking not your own money. You are risking money you've already made, and you can make 1-to-2. Okay, so there are more profits, because if you made 1-to-2, so you've got 50, and this 25, you've got 75 pips. You've got 75 pips and 75 euros already. Okay, so that is the reason why I'm sending a few levels. Of course, the idea is just to to try to keep your positions as long as possible. Of course, I know it's not that easy, okay, especially based on that example, okay, because we can put it that way as well. There was 138.31, so this is exactly that point here, 31, and if I had kept this position as long as here, so I could have made 130 pips, so it's more than 1 to 10 probably, okay, so it's like 1 to 13 or 1 to 15, and the market is most probably is still willing to go to the downside. I think now more and more traders, more and more market participants, they have seen that, okay, they say we are too late, we have to enter into short positions, so they are now enter into that position, so this should develop, this downward move should develop further. Okay, so that's the point. As I said, that's the idea, to keep it as long as possible. Let's take another position and another example. Let's take the first example in November. This was this 131.55, and I made, based on those, this was the TP2, so the second take profit, and I made only 106 euros. Let's have a look on that. This is this position here, and I have located this trade setup by the end of September, but it was triggered a day or 2 days later, so it was on the 2nd of November. Oh, sorry, of October. So we've got this 131.55, and the market went to the upside, okay, and the market in this one move made 150 pips, okay. My take profit, my third take profit, was 133.81, okay, so the market wasn't able to make this profit. My second take profit level was 132.61, so 132.61, so it was around here, so that's why I've got only 106 pips as a profit shown there. Yeah, so you can see that based on my positions and based on my trade setups, you can make more than that I'm showing here, or I'm showing, because you can have a look by your own on that. So all my profits are shown here, okay, and I will update it today, because there's as I said, one position left which is still opened, so there are all the details regarding my positions, and so you can examine it by yourself. But this is how it works, how the Forex markets and how the Forex world works. Yeah? So sometimes you don't know how much the market will let you make. Okay, let's take another example. Let's take a position I've sent on the that was on the 10th of October for Euro USD. 10th of October. Okay, so that was the 15th. Okay, that was here. Okay, I was already thinking about that the market should go to the upside, and I've sent this position when we're here, and I made roughly 40 pips or something like that, because that was set up for this yeah, that was the 135.41, 135.41. that was here. Actually, I had just after that, I think I had another position. Yeah, that's the, wait a second, there was a position for a short trade setup. Do I have it? Yeah, I know. Oh, yeah, okay, that's I had a different one positioned, and I updated that one. That those two goes together, because I sent this one, made this 34 profits, and I set an update for that position with a lower entry and yeah, the market was going to the downside here, so I thought, okay, the market is able to make some profit to the downside as well, so I sent this one, and there were 36 pips as well. But what I want to show you, this 34.47 and the stop loss was 34.61. Let's have a look on that. 34.97, so that's the entry. The stop loss was, as I said, 61. The market went to the downside only to 71, and then went to the upside very, very strongly, making more than 300 pips. Okay. And I closed my position, because when we were here, I wasn't sure. I couldn't say, okay, the market will definitely go to the upside. Yeah, I don't know it. We don't know it. Yeah, of course I make my predictions and I make my analysis, and I spot such a moves. Yeah, but when we are here, we don't know that. Yeah, so that's why I usually divide my position into few, just to keep some of them, let some of them to develop. Okay, so this is quite important. Okay, because if you've got a stop loss, so you have a stop loss, you wait until the last pips, hoping that it won't be triggered, but it was. And sometimes we, as human beings, we close our profits a bit earlier, because we want to have those profits. Yeah, we want to have it in the pocket. Okay, so that is how the markets develop and how the forex market works. Yeah? So sometimes it's worth to make your profits a bit earlier, okay, and sometimes usually you should try to keep your position longer. Yeah, it's your own decision. Yeah, I try to send my signals. Usually the TP1 is at least 1-to-1. That is what happens quite often. This is usually 1-to-1, and the other ones are longer, so you can make more profits with them. It doesn't mean that if you have a TP1 and you move your stop loss to the entry, that you won't be thrown out from the market, because it may happen. But what you can do, you can say, okay, if the market throw me out, let's take the same example with Euro USD on the 1 hour chart. As I said here, you entered with 14, and you didn't make, or you divided your position in 3, so you've got 3 positions, and you made your first profits. Okay, you close your position, but then you were thrown out. But you said, okay, good, I will open another one position, because it looks like that the market is not going to a downside, and I can make another. I can open another position. Ideally is to keep it and let it develop. So that's the goal. Okay, you can work on it. It takes some time. I cannot say I always manage to have it. Yeah, it's quite often. Let's have a look on that one as well. So this is my last position for this month. This is from today's position. That is my Google Plus profile, and I share some ideas, and I comment the current situation on the forex market based on this Google Plus account. So you can join me here, and you will have access to all these comments. And let's have a look what I wrote this morning at 7, almost close to 7 a.m. CET. And I said, okay, we will have probably a break through the support line in a few minutes. And I sent a comment to that. It's in bilingual, so it goes in English and in Polish, so don't worry, you will understand it. Entry while retesting the support line. Ideally, fast retesting in the next few minutes after the break with stop loss should be a good trade. And let's have a look on my signals. I've sent you a signal, this signal. You can receive my signals either via email. It goes always via email, so and you can have it also via SMS, so we deliver it on your mobile. Okay, so that's how it looks like when you receive an email. Okay, so you've got a short comment. This is this entry level, and sometimes I add alternative possible entry level 134.84. Sometimes I write here HR, higher risk, Okay, so there are more risk involved than my usual position. Okay, it means, okay, be a little bit more careful. Okay, and maybe move your stop loss a little bit earlier to the break-even point. Okay, but let's check it on the market. Okay, we are now developing quite nicely. So that is the situation in the morning. I had this break through this support. That is this retesting I was hoping, and the market actually didn't manage to get up to 84. Yeah, it reached only 82. Yeah, sometimes it happens like that. Yeah, so you can be a little bit more flexible, because what happens sometimes with those support lines, you can say you should enter at least your first position here, because you don't know whether the market will start falling down very quickly. Okay, so sometimes you won't be able to enter with a better price. Okay, but in that case, I thought, based on my experience and based on my analysis, I said, okay, this is possible that we will go up to this point, and we will have a better entry price. And that was indeed in this case. So 134.77. Yeah, this 84 wasn't reached, but this 77 was. So you could have entered into this position, and this position is now developing, as you can see. Should go to the downside. What I do as well, sometimes I send an update to a position, and there was an update to this position, and I thought, okay, it's important to send okay, let's open it, to send the TP0. Okay, so first take profit level, and I added also HR, higher risk, because I wasn't sure that the market will go, whether this trade start developing or not. Okay, and there were a few dodges, so I thought, okay, so it's better to be a little bit more careful. And as I said, I added TP0, which is based on this length 45. So this is roughly. I know what I did. Oh, wait a second. I thought I had added. Yeah. Okay. It was already reached, because the market could make a 5 waves impulse to the upside, and this could be a correction. So the market may react to that level. So that's why I sometimes think it's important to maybe to get out a little bit area, to make some profits a little bit area, just to be sure you've got your profits in your pocket. And I spot perfect trade setups. So sometimes if I risk this length, it doesn't matter that I make only 30 pips or 40 pips if I can make it, and if I show trade setups which are perfect trade setups. Let's take another example. This is that was shown yesterday evening to my subscribers on the Google Plus. Okay, I said the market can go to the downside. Let's have a look on that. Okay, so that was shared yesterday evening. We had a Fed decision yesterday evening, and I said, okay, so be careful with this Fed decision. You've got a chart added to that, and I said, okay, I can imagine such a trade with initial entry at this, but I was expecting the market will go to the upside, and you can enter at a better price, 137.18, and this trade setup can develop. And you can see the market went to the downside, then went to the upside. If there was even a better entry level, a better entry price, and the market reached this 161 level, and my initial stop loss was above that here. So this is, in this case, this is 1-to-1 at least. Yeah, but if it were a little bit less than 1-to-1, or only 1-to-0.5, so half of the risk you are taking, I think it's still okay sometimes in some cases, because this is a perfect trade setup, and there are high chances that this trade setup will reach some of the taking profit levels sometimes. So I think it's worth to enter into such a position. Okay, and that was my last example in this video. I hope you enjoy it. So thank you for your time, for your attention, and I hope I can hear from you soon. Good luck.